Hello and welcome to Virtual Investor Conferences. My name is Eric May, and on behalf of OTC Markets, we're very pleased you have joined us for our next live presentation from Minera Alamos, Inc. Please note, you can submit questions for the presenter in the box to the left of the slides. You can also view the company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I'm very pleased to welcome Doug Ramshaw, President of Minera Alamos, Inc., which trades on the OTCQX Best Market under the symbol MAIFF and on the TSXV under the symbol MAI. Welcome, Doug.
Thank you. Thank you for having me, and good morning or good afternoon to everyone. Minera Alamos is looking to build the next mid-tier gold company, and starting with the foundation of assets I'll take you through today. Before I get going, so I normally go off and then realize I haven't given the forward-looking statement slide. So let's get that out of the way. It is actually important reading. There are forward-looking statements made, and to protect yourselves as investors, it's always important to read the fine print. What I love, I've said this before, the best thing about the OTC platform in these presentations is I get half an hour to talk to you. I will try to leave some Q&A time. I also try to cover off what I think are going to be those major questions during the presentation. So bear with me and bear with your questions. Hopefully I cover them off. I think it's important to talk about Mexico right off the top because there are a lot of headlines out there that cast more of a negative light on Mexico. We've operated down there for 14 years. We've seen the ups and downs of jurisdiction. No one will dispute the geological potential there. No one will dispute the fact that you can build stuff and run stuff cheaper than most tier one jurisdictions. And traditionally speaking, Mexico had a remarkably good permitting environment in terms of speed of the process and also the speed of getting things permitted. And in fact, we've permitted mines with both the current AMLO administration and its predecessors. So we're certainly well versed in the permitting environment there. So Santana, our first mine, we got those permits from at the beginning of the AMLO government. Obviously, that time is coming to an end in terms of the president who can't run for a second term, although it seems likely his party will stay in power. Those elections are in June this year. What we've seen in the last couple of years of his term is things really slow down, and there's some important context here to discuss. Very early on in his administration, he culled the civil service. So there were huge layoffs, huge, forced retirements or take pay cuts or retire. And that's coming home to roost now in the back half of his term. And it has definitely slowed down the process. The process arguably hasn't changed. It has got longer. I still think it's enviable compared with a lot of permitting environments. But it has created some challenges. Now, the thing about, as mining investors, and I'm guilty of this, we hear a lot, and you'll see, people talking about a government agency called Sermonat. Sermonat is involved in all manner of things, not just environmental permitting for mines, but permitting for, a good example is condo developments. There are condo developments right now that are stalled in Mexico, not because there's a sweeping no more condos in Mexico mandate from the government, but those same stalls of those developments are as a result of a lot of layoffs in that department. So it slowed things down. We are hopeful that with the incoming new president, that there will be a moderating of some of the language that has been coming out that seems quite bizarre at times, because this administration is making more money from mining than any previous administration, and yet seems hell-bent on being anti-mining, except we are already seeing a softening of that to some extent with the heir apparent, Miss Claudia Sheinbaum in Sonora, recently extolling the virtues of Mexican copper and lithium deposits in terms of requirements for the EV transition. So, those are open pits. So, so there's a lot of talk about open pit mining bans. In fact, President Obrador has put forward an open pit mining ban that would actually require 2/3 majorities in both houses of Congress, and his coalition isn't close to having those. So, we see a lot of things in election years, and I think we have to take with a bit of a grain of salt, but be also cognizant of the changes in the environment down there. The nice thing about Minera is we have one mine permitted, and we have a second project that's sitting with its permits already, and permitting a third. So we're not a binary outcome on permitting at all. And to be perfectly frank, there are a lot of mines. If every gold mine shut down tomorrow, I don't think the world would notice or care. I mean, mining companies would. If every copper mine shut down, the world would notice greatly. So do we need every gold mine? Do we need every mine in period? I think there should be responsible mineral development. So mines in environmentally sensitive areas or areas with precious water resources that shouldn't be diverted from the local economy for a mine. Maybe those shouldn't be built. We're very happy about the areas where our mines are, where actually we think will make a very meaningful difference to the people in those local areas. Arguably, Mexico has 500,000 people directly involved in mining, and many, many millions more that are, indirectly affected through the kind of multiplier effect of that investment into the local economy. So mining is very important to the fabric of Mexico. There are open pits now. I believe there will be new open pits being built 10 years from now. But there is a lot of noise. I'm looking forward to the election being behind us so that hopefully we see a waning of that noise and we can get back to responsible mineral development that helps our stakeholders, whether they be shareholders, the local communities we're actively involved with, or the government itself. So that's kind of Mexico off the top, and I think it's the elephant in the room, but it's one, as I say, that we are comfortable with, given our history and understanding of Mexico as an environment. So Minera is a gold mine developer in Mexico. As I'd mentioned earlier, Mexico has enviable costs both on the capex and op cost side of things, and that has, I think, insulated us greatly from inflation. Whilst we've been waiting on certain permit amendments and the conclusion of the permitting process on Cerro de Oro, the one thing I will say to people is, delays can test one's patience, can test one's resolve. They don't test the balance sheet the same way as, say, a big capex overrun. And in that regard, we have been very insulated from both inflationary pressures that have been rampant in the sector, but also, some of the delays that have happened. We've maintained a strong balance sheet, and we've made tough decisions to ensure that, because time doesn't have the same cost. That being said, 2023 was a tough year for us and our shareholders, and I'm happy with the release of our year-end financials yesterday. It showed a healthy balance sheet that in many ways, I hope that marks the end of us looking back and thinking about 2023, and plans that we put into effect already with press releases this year should point to a better 2024 and beyond. So where are we in the cycle? Well, Santana is in operation. Cerro de Oro is in permitting, and La Fortuna, our third project, is actually permitted, and we could build it before Cerro de Oro. It's always been our contention that the sequencing should be Santana, Cerro de Oro, then La Fortuna. It's nice that we have that ability to pivot, but we see no evidence to date that Cerro de Oro won't get permitted. So there's no reason to make the pivot to build La Fortuna right now, but it's a fantastic third string quarterback sitting on the bench waiting to come into the game. We focus on small projects initially that we believe can grow. We're deploying cash flow from those operations to expand the resources, and as we expand the resources, we can expand both mine life and the production profile. So, typically our projects can be in the 2, 3, 5, up to 800,000 ounce range, but all exhibit all the hallmarks of projects that can grow organically from the cash flow produced from the starting operation. We started with Santana. We built that during the pandemic. It was on budget, 10 million in capex. It was a little delayed because of the pandemic, but on budget. Had a good starting 2022, and then we made some tough decisions in 2023 to scale back production as the drought that had been hitting Mexico hard and Southern California hard kind of was in its waning months. We now have a plan that we've announced this year to expand production at Santana again. Happy for that, because I don't think our shareholders should be sitting on their hands waiting for a permit amendment that has taken its time to come through. We have a plan to advance operational performance at Santana regardless of that. Cerro de Oro is a game changer for us. You can see they're both meaningfully in terms of ounces and annual production. It's a step up from Santana. And that's just the base case PEA that we put out. We're actually permitting for something about twice that size. Again, low capex, and we've ensured that our shareholders won't have nasty surprises on that. We've already arranged the project finance. So upon receipt of permits, there'll be no question of how do we build it. And La Fortuna, which is a 5-year, 50,000 ounce a year operation, which we know can be bigger, and we kind of want to grow it first before building it from that starting base case. But all, as you can see, both from an op cost projection perspective, capex perspective, enviable. Now, if we look at what these operations sequenced together will give in terms of, these are trying to represent the annualized kind of forward run rate of the project. It shows how with our existing base case projects and their base case economics, we can see a path to 150,000 ounces of annualized production. That will scale in 2024 relative to 2023, and then should see a big step up in 2025 and beyond. Obviously, permit dependent in terms of that Cerro de Oro contributing, but we have no reason based on conversations to date to think that is going to be a problem mine for this administration or the next administration. I mentioned earlier, and I think this is kind of the secret to our projects, low capital intensity. We are great stewards of our shareholders' capital. It's amazing when you become a big shareholder yourself, as I am, how cognizant you are to dilution. We've only diluted, I think over the last 5+ years, a little over 30%. I see companies on one financing dilute their shareholders more than 30%. 30% dilution over 5 years. It's a hallmark of the company for sure. The other thing is, we can build our mines much cheaper than the peer group. And I used to say it was leading industry capital intensity, and then I asked our bankers at National Bank to actually give me the data to support that, and I was quite thankful that the data supported what I've been saying. It's a good technical board, engineers, metallurgists, geologists, and more importantly, the team that does all the hard yards down in Mexico includes Darren Kernaghan, our CEO, who spends virtually all his life now down in Mexico with the team that he's worked with down there for the last 13, 14 years. When we've needed to, and as we grow, we will continue to add smart people, like we did when we brought Chris Sharp over from Centerra Gold as our VP Project Development. That helps ensure that we have the bandwidth to actually advance multiple projects, but we're also going to advance them in sequence which makes much more sense than trying to do too much at the same time. And so hence Santana, get it up and running, get it to its kind of normalized run rate. Cerro de Oro comes on, use cash flow from those projects to ensure that Fortuna is grown as a resource base first, so that we're building the right size Fortuna out the gate, and instead of 50,000 ounces a year for 5 years, maybe it's 70 or 80,000 ounces for 8 years when we turn it on, and it's a perfect kind of repository for the free cash generation of our first two projects to kind of grow Fortuna first. Roughly 150 million market cap, at year end, about $20 million in working capital, 13.5 in cash, no warrants on the stock. Our biggest shareholders outside of retail and high net worth individual are generalists like Aegis Financial. Donald Smith, we own 5.5% probably as management. Sometimes you see pie charts and they show that wedge is way bigger, but you got to ask the question, what was the cost base of that? So I know from my perspective, I own 2% of the company, and maybe if I'd bought into some founders' shares in some company, I could have a giant stake in something. But I prefer to make sure I'm properly aligned with our shareholders. So my cost base on my 9 million shares is about 27 cents. So a fraction below where we are right now. I think it's a lot of the little things that we do the right way that have overcome some of our headwinds that we've faced in terms of the loyalty and resolve of our shareholders. And we're grateful for every single one of them. But it's because we're big shareholders ourselves. It's amazing how you approach your shareholders very differently when you've got an equal stake to them in the company. I mentioned Santana. We started operations in 2021. First gold in November 2021. We have permit amendments in place or submitted to triple the pad capacity for the next phase. And the only reason we even got into permit amendments very early on is this was a project that was inherited in a merger with another company in early 2018. That permit process had started by that other company, so our team kind of took it on in its natural course. It's not the way we would traditionally permit things. You'll see with Cerro de Oro, we're permitting for an 11 to 12 year life project with a much bigger production scale than the base case. There won't be permit amendments in that future. That's the typical Minera way of doing things. In terms of Santana, we've just kind of had to bootstrap permitting a little at the same time. So it did have very good cash costs during our first kind of full year of production in 2022, circa 900 US. Point to be made there is, yes, we're at record high gold prices right now. I used to think and I think it's true, $1,800, $2,000 gold are very healthy gold prices. Our business model was designed to work in a $1,200, $1,300 gold environment and take advantage of higher gold prices. So when we've been producing gold at Santana, it's been very high margin. Our problem in 2023 was our decisions that we made slowed production. This year, I'm happy to say that we're going to be boosting production again, and that will follow through into next year and beyond. So when we've been producing this project for something that only cost $10 million, spits off a lot of free cash flow. The starting resource of about 300,000 ounces. It's good for the next 5-6 years of mine life, depending on how we want to sequence or accelerate production relative to our exploration. Cerro de Oro in northern Zacatecas, I don't think that you could have a better part of Mexico to want to build a big open pit. Lots of flat ground. Everyone in northern Zacatecas seems to be involved in mining or associated one way or the other. Legacy that goes back hundreds of years there. It's a great place to operate. We've got 100% community support for this project. We've got municipal town support and support in state government for this mine that will contribute a lot both to the local, state, and federal economies. say the starting PEA was an 8-year mine life, and maybe in the interest of time, I'll jump straight to the PEA summary. This was a project, we ran this at $1,600 gold, and it spat off 111% after tax IRR. There's a 28 million CapEx requirement for it that includes 30% contingency. We have a $25 million funding package lined up. 11-month payback, again, this is at $1,600 gold. 8 years initial mine life, sub 900 AISC. Interestingly here, very little sustaining capital. The sustaining capital is largely just the phases of pad expansion that you do. So the operating cash flow that this project spits off is largely going to be free cash generating. Very little sustaining capex to fund out of your free cash. And we know it can get bigger. We're permitting for something which is more like an 11 to 12-year mine life and 85, 90,000 ounces a year. There's the funding package. For people who don't like royalties, fear not. It was a $15 million loan and a $10 million royalty package, 2.75% NSR. We can buy back 2% of that NSR. And I think if we'd done this deal with a traditional royalty company, the last thing they want to give is buybacks. But because we know this project can get a lot bigger, but a royalty will be priced on what you have now, it was absolutely essential that we had a healthy buyback on that NSR. La Fortuna, already permitted. You can see from my comments on the scale and what we're permitting for Cerro de Oro, why it's next in the sequence. But we have the federal permits here. One of the reasons that 2018 PEA had sub 500 AISC, which I think actually does address one of the questions I've come in. So one of the reasons is this is a fabulous high-grade open pits, 3.5, 4 gram open pit, 6-to-1 strip. And we ran that PEA in 2018 at $1,250 gold. And even at $1,250 gold back then, it had a 93% IRR. Now, yes, arguably certain costs have increased. CapEx, our $27 million CapEx number there won't increase too much. We have a 2,000 ton a day mill that's already been bought, so we're not going to see any cost inflation associated with the mill. So I arguably think this is probably now, 7 years on, more like a 35 to $40 million project, not 27. But yeah, those low AISC numbers of $500 US an ounce are very much a function of this being a super high grade open pit. It's a fabulous project. We just want to make it bigger. No one likes a 5-year mine life, and we know it can get bigger. There's lots of exploration around right in the middle of that map is a little dot. That's Fortuna. Around it, there are brownfields extensions of that pit, that starter pit, and tremendous exploration upside on ground we picked up around it. There's been no systematic exploration here done since 2008-9, when our team actually owned this project in another company that got bought out by Argonaut Gold, Castle Gold. They bought it for the El Castillo gold mine, which has now just come to the end of its life. A mine that got up to 120,000 ounces a year at its peak, that our team started up for $7 million in capex. That's a 25,000 ounce a year operation, and grew it from cash flow, exactly as we're planning for most of our mines now. So it's something we've done before very successfully, and plan to replicate in Minera. Last couple of things, we have some copper assets. We own outright Los Verdes, and we've acquired rights to Suaki Verde, another low capital intensity copper production play. We don't talk about copper in our company. Minera was formed, basically there was a company called Virgin Metals that renamed itself Minera Alamos when the focus shifted to gold. So we've had Los Verdes sitting in the company all this time, and it was high time to find a way to surface value for our shareholders from what is a very good asset. This had a PFS done in 2008. It had a PEA done in 2012 that we think we can drop the capex considerably. It was $90 million, something like that. We're looking at starting it smaller, but even back in 2012, and with a 90 million capex on this project, it kicked off a 36% IRR and over $100 million MPV at 250 gold, 250 copper. So if you're a believer in copper, we have assets in Minera, but they probably don't belong alongside our gold assets. So all this will not be at a distraction to our gold business. We're going to incubate it at the subsidiary level. We are going to look to fund directly in at the subsidiary level with outside money and ultimately take this public. And the question will be, do we immediately spin out shares in kind of, let's call it Minera Copper to our shareholders, or keep a corporate interest in a partial spin out? But something will happen with Minera Copper. We've added rights to another asset this year already. The goal is towards the end of the year, very early 2025, we'll look to have it as a completely standalone entity. Swaki Verde is SXEW oxide copper. And it's interesting, you'll see charts from bankers talking about how discoveries for copper are getting deeper and deeper. That's because a lot of the easy stuff, the green oxidized copper surface, is being found. SXEW is basically the copper equivalent of open pit heap leach gold mining. The difference is your reagent is sulfuric acid, it's not cyanide. But it's very low capital intensity. And that's why I like to say copper capex doesn't have to start with a B. You don't have to look at projects and think, yeah, that's great, but how are they going to find the billions of dollars to build it? These are projects that can be built in the $30 to $40 million range. And you can build arguably a very interesting and good copper production profile of modest capex projects. And we think Mexico, as does Claudia Scheinbaum, offers plenty of opportunity for that. So yes, a chance for a spin out at some point. Look forward to keeping shareholders informed on that. And with that, I'm just going to check if there are, and the catalyst page. We've knocked off a couple of already. Obviously, a big one this year to focus on will be Cerro de Oro permitting. Upon getting permits, we have the funding, so the construction decision will come pretty much immediately. We're still looking at other opportunities down there. We think this noise in Mexico is going to pass, and we're also looking at opportunities outside of Mexico too. But for all the reasons I said earlier, we still are very bullish and are very comfortable operating in Mexico. And Santana, we have a plan over the next 12 months to boost mining up to 25,000 ounces a year. Even without the permit amendment will allow us to really feel much more comfortable on saying that's the normalized rate moving forward. So it should be a pretty good year for us. I mean, maybe we set the bar so low in 2023, it was hard not to say that it was going to be an improving year in 2024. But I think lots of reasons to be positive. And so with that, I'll see what questions. I think I addressed the ASIC at La Fortuna. Infrastructure at Cerro de Oro, I mean, we're surrounded by infrastructure. It's funny, mines build infrastructure. It's not infrastructure that builds mines. So when you're in a place with lots of mines there, it's amazing the infrastructure is already in place. There's power, there's roads, there's people. Mexico have an unbelievable workforce there. Lots of active contract miners. So a lot of the what I think are going to be very sticky operating costs that we're seeing in tier 1 jurisdictions are going to be less sticky in Mexico. And yes, Minera are very much brownfields. Minera Copper, they're very much brownfields projects. Tremendous amount of historical data done on them, economic studies done on them. We don't really tend to play around in greenfields, grassroots exploration and development stuff. There always needs to be a path to us building things. Production estimates at Santana for 2024. Well, on an annualized, like we're into Q2 now, so the mining has just started at Santana, and it's a 12-month sequence. So you're going to see some of that coming out in 2024, and then the rest coming out in the first half of 2025. But arguably, This year, we should see a big pickup on full year 2023 production. And all being well, we should see that continue through 2025 and beyond. And with that, 5 seconds left. Thank you, everyone. I appreciated the time you had with me today.